19. Tapu and Sonu are the partners sharing profit and loss in the ratio of 1:2. The balance sheet of the firm as on 31/3/16 was as under. Balance sheet as on 31/3/16. On liability side, capital accounts of Tapu and Sonu is 2 lakh and 3 lakh, that is total 5 lakh. Profit and loss account 48,000, creditors 50,000 and bad debts 16,000. Goodwill 54,000, land and building 3 lakh, machinery 1 lakh, stock 40,000, debtors 80,000 and cash 40,000. Total of both sides is 6,14,000. They admitted Kohli as a new partner on the following terms. Goodwill is valued at rupees 54,000. Bad debt reserve on debtors to be maintained at rupees 10,000. Land and building is to be increased by 10%. Book value of machinery is 25% more than its market value. Value of stock is to be reduced by 10%. Kohli will bring his capital equal to 50% of net assets of the new firm. Kohli will bring his share of goodwill in cash, and Tapu sacrifices 1/3 of his profit share and Sonu sacrifices 1/6 share for Golu. Prepare necessary accounts and balances. Also determine new profit and loss sharing ratio of all the three partners. Here, first of all, we have to find the sacrificing ratio. Here in the point number 8, they have given that Tapu sacrifices 1/3 of his profit share and Sonu sacrifices 1/6 share for Golu. Now here, Tapu sacrifices 1/3 share of his profit. Now old share of Tapu and Sonu is 1:2. So sacrifice of Tapu, they have told that it is a 1/3 of his profit share. So profit share of Tapu is 1/3. Sacrificing ratio is 1/3 and profit is also 1/3. So 1/3 multiplied by 1/3 is 1/9. Now sacrifice of Sonu is 1/6 share. So sacrificing ratio of Tapu and Sonu is 1/9 is to 1/6. By making denominator equal, 9 2s are 18 and 6 3s are 18. So 2 1s are 2 and 3 1s are 3. So it will be 2:3. Now we have to find new share. New share is equal to old share minus sacrifice. Tapu's old share is 1/3. Sacrifice is 1/9. By making denominator equal, 3 3s are 9. So 3 1s are 3 by 3 1s are 3 minus 1/9 is 2/9. Sonu old share is 2/3 minus 1/6 is 2 2s are 4 minus 1/6, it is 3/6. Share of Golu. Share of Golu means sacrifice done by both the partners. So sacrifice of one partner is 1/9 and second partner is 1/6. Here also we have to make denominator equal. 9 2s are 18 and 6 3s are 18. So 2 1s are 2 plus 3 1s are 3 is 5/18. Your new profit and loss sharing ratio is 2/9 is to 3/6 is to 5/18. By making denominator equal, 9 2s are 18, 6 3s are 18, 2 2s are 4 and 3 3s are 9. So your new profit and loss sharing ratio is 4:9:5. Now they are told that Kohli will bring his share of goodwill in cash. So distribution of goodwill, share of goodwill is equal to sacrifice of Tapu and sacrifice of Sonu. So sacrifice of Tapu plus sacrifice of Sonu, sacrifice of Tapu is 1/9 plus 1/6. So we will get here 5/18 by making denominator equal. Here goodwill of the firm is 54,000. 54,000 multiplied by share of Kohli is 5/18. So here we will get 15,000 as a share of goodwill. So goodwill of Tapu is 15,000 multiplied by 2/5. Premium of goodwill, this is known as premium of goodwill. So premium of goodwill will be distributed. Premium of goodwill will be distributed in the sacrificing ratio, that is 2:3. 15,000 multiplied by 2 by 5, 6,000. And here goodwill of Sonu, that is 15,000 multiplied by 3 by 5 is 9,000. Okay. Old goodwill will be distributed among old partners in the old ratio, and premium of goodwill will be distributed among old partners in the sacrificing ratio. Now there is the point that book value of machinery is 25% more than its market value. Book value of machinery is 25% more than its market value. So when book value is 125, at that time market value is 100. So what if book value will be 1 lakh? So it will be 80,000. When book value is 1 lakh, at that time market value will be 80,000. Capital to be brought by Goli. Now here there is point that a Goli will bring his capital equal to 50% of net assets of the new firm. So net asset is equal to total assets minus total liabilities. So Tapu's total asset is 2 lakh. Now from where we have got all this value? Here whatever we have distributed, here we have distributed capital of both the partners. Balance, profit and loss, premium of goodwill and cash. So here 2 lakh plus 16,000, 6,000 and 4,000 minus 18,000 is 2 lakh 8,000. Sonu goodwill is 3 lakh 13,000. So total is 5 lakh 12,000, and 50% of 5 lakh is 2 lakh 60,500. 2 lakh 60,500. Now first, this is the balance of Tapu, capital balance of Tapu. This is profit and loss. Afterwards premium of goodwill and revaluation account, and this is old goodwill. For both balance, profit and loss, premium of goodwill and revaluation and goodwill. This all thing is distributed among old partners in the old ratio. Profit and loss, premium of goodwill and revaluation account and goodwill, these are distributed among old partners in the old ratio. Now we have to prepare revaluation account. In revaluation account, credit side, whatever amount is increased on credit side and whatever amount is decreased, we have to write on debit side. Now, bad debt reserve on debtors is to be maintained at rupees 10,000. So in balance sheet it is given that bad debt reserve is 16,000. But in adjustment it is given that 10,000. So 10,000, 16,000 minus 10,000 is 6,000. Afterwards, land and building is increased by 10%. Value of land and building is increased by 10%, that is 30,000. 10%, 3 lakh, 10% is 30,000. Value of stock is reduced by 10%. Value of stock is given in balance sheet is 40,000. It is reduced by 10%, that is 4,000. Here machinery we have found. In balance sheet they have given machinery of rupees 1 lakh and its value is 80,000. So 1 lakh minus 80,000 is 20,000, means value is reduced by 20,000. Now whatever difference is there, it is 12,000, it will be distributed among old partners in their old ratio, that is 1:2. 12,000 multiplied by 1/3 and 12,000 multiplied by 2/3. 3 fours are 12 means 8 and 3 fours are 12, 4 ones are 4. Now we have to prepare cash account. Balance brought down as per the balance sheet is 40,000. Premium of goodwill is 15,000 which we have found here. Afterwards, Goali's capital is 2,60,500. Total is 3,15,500. This is known as by balance carried down on credit side. Afterwards, we have to prepare partners capital account. Particular Tappu Sonu Goli and particulars Tappu Sonu Goli on debit side and on credit side. By balance brought down as it is given in balance sheet 2 lakh and 3 lakh by profit and loss account. Now profit and loss account is given 48,000. So 48,000 multiplied by 1 by 3. 3 ones are and 3 6 are 18, it will be 16,000 and 48,000 multiplied by 2 by 3. It will be 32,000. Afterwards, premium of goodwill is 15,000. So 15,000 multiplied by, it will be distributed as per the sacrificing ratio. 15,000 multiplied by 2 by 5. 5 3s are 15. And 15,000 multiplied by 3 by 5. 5 3s are 15 is 9,000. Old goodwill that is given in the balance sheet 54,000. It will be distributed among old partners in the old ratio. 54,000 multiplied by 1 by 3. 3 ones are 3, 3 eights are 24. It will be 18,000 and 54,000 multiplied by 2 by 3 is 36,000. And here cash brought by Goli, that is 2,60,500. Total is 2,26,000, 3,49,000 and 2,60,500. The difference is 2,08,000 and 3,13,000. This difference will be written on balance sheet liability side. Balance sheet liability side, Tappu 2,08,000, Sonu 3,13,000 and this 2,60,500. And here creditors rupees 50,000. Here total will be, here it is 0, 0, 5, 1, 12 lakh 1, 2, 8, 12 lakh 81,500.